Money Radio, thank you for joining us today. And joining us now, Steve Nielander. He is an adjunct professor of finance at San Diego State University, a CFA, and also a partner with HPM Partners. Steve, thank you for joining us.
Thank you, Sinclair. It's nice to be with you today.
About a week or so ago, almost out of the blue it seems, Trump says we need to get away from quarterly earnings reports to maybe once every 6 months or so. It wasn't exactly clear, but I think that was the idea. A move away from short-term itis. And we've heard similar ideas from Warren Buffett, Jamie Dimon at JP Morgan Chase. Do we have a problem with quarterly earnings reports and short-term itis on Wall Street, or is this how we keep track of what's going on?
Well, Sinclair, I think it may be actually a little bit of both. You're right on Warren Buffett and Jamie Dimon. They've been very vocal, and Warren Buffett obviously is, one of the best investors out there, that we're way too focused on next quarterly earnings, that's not really what investing is all about. Listening to a professor from MIT, Robert Posen, who's a former Fidelity executive this week, he commented that he thinks that it's going to deprive investors of more timely information, that they need it to, free flow of the markets, make the markets more efficient, a potential for insider trading by executives if they're going, 6 months without reporting to the public. Those can be valid concerns. One of the things that Trump did was, as they mentioned, he talked to Indra Nooyi, the outgoing CEO at PepsiCo, and she was a big proponent of the extending the time to 6 months. And over in Europe, they did an experiment on this exact issue. Mm-hmm. And between 2007 and 2013, I think it was, about a 6-year period of time, they were doing 6 months reporting. They went down to 3 months and then ultimately unwound it in 2014 timeframe. It was a study done by the CFA Institute that indicated there really was not a material change in the amount of capital expenditures that were going on, or really, longer-term planning. So that could argue, what's the difference at the end of the day? I think you're going to have most people that are, really want the efficient market and think that they need to have a free flow of information. They need to get information as much as they possibly can. So that would argue for doing it quarterly.
Whether they report quarterly or semi-annually, they still have to keep track of the numbers each and every day. So why not release that information? Why not be transparent? Why not go with disclosure? Part of this seems to go back to Wall Street analysts as well, who seem to get off on this speculation game of it all and the whisper numbers for this company and the estimates over here, and can the estimates be beaten? Seems like a game.
Yeah, I would agree. When I first got in this business a number of years ago, there was more independent legwork that had to be done by the analysts, for sure. The ones that were willing to work harder and dig more, and everybody gets so caught up on this. What are they going to do this quarter? What are they going to do this quarter? And I'll tell you, early on in my career, when I was doing some lending work, there were a number of times we'd have companies. Now, these were not publicly traded companies, but it's the concept that I want to go over here. They could literally be in a situation where you could have your production line break down on the last day of a quarter, and you can't ship product. It doesn't go out. If that's the close of the month and the close of the quarter, you're not going to be able to report those as sales. And literally the next week, when the production line gets up, they go right out. So all of a sudden you have a decline in one quarter and the next quarter is exaggerated. Mm-hmm. Is there really a fundamental problem there? No, not really. But if it gets reported that the one quarter doesn't look good, then all of a sudden stocks start to drop down for really no real reason. Is there too much of management worrying about the numbers? Do they get so focused on that they're not taking into consideration investments and other things that they could be doing because they've set a number and they're worried about disappointing the market?
Or should we look at the market and say, why is the market rewarding speculation? Why do we have day trading and trading on algorithms so that if there is an earnings miss, all of a sudden computerized trading kicks in, the stock tanks? Maybe that's what we need to focus on rather than the actual, whether it's 3 months or 6 months reporting.
You would find no argument from me on that. Now, I'm not involved in that aspect of the business, and those people would argue with you vehemently that that's providing more liquidity to the market, it's making markets more efficient. 30 some odd years ago, they used to have the uptick rule for shorting stocks, and that went away underneath the guise if you needed more efficiency in the market, more liquidity. It got canceled in the financial crisis because they realized people were just piling on. So a lot of the modernization, I think, in today's world of trading is not what we're all about at my company. And I don't think, Warren Buffett doesn't look at it that way. You're buying a business that you look to see grow over time, and you want to be part of that. And really, from quarter to quarter is not a significant derailment for a company that could be doing well. So I think you're going to have split view on people depending on what their focus is within the markets overall. One of the things that President Trump has wanted to do is to look at where can he peel back regulations, where can he free up management, if there's management time can be better used elsewhere. One of the pieces I was looking at the last couple of days, a number of key executives said that they've got a team of people that spend 3 weeks every quarter getting ready for these quarterly reports. And is that the best use of all those people's time if, in fact, there's not going to be material changes in companies over the period of time? So as I think Trump likes to do, he typically stir things up a little bit. He's reached out to some corporate executives. They've given him some ideas. The marketplace has given him ideas. And maybe we can look at a situation where they do bigger reports on a semi-annual basis and a more brief quarterly type of report, and maybe keep everybody happy that way.
You can complain about presenting quarterly reports until such time as you get it all wrong. You want the accuracy, you want transparency, accuracy, and honesty. When something's not being disclosed, that's when you're really going to be raising holy hell. So
I can't disagree with that.
Steve Nielander joining us from San Diego State University and HPM Partners. Good conversation.